How do you know if a mutual fund is performing well? Welcome to the Master Mutual Funds, a Beginner's Guide video series. We have covered a lot of information in our earlier episodes. If you have missed it, kindly click on the above link. In this episode, we'll explain the different ways to calculate mutual fund returns and what they mean for your investments. Absolute returns. This is the simplest way to calculate returns. For example, if you invested 10,000 rupees and it grew to 12,000 rupees, your absolute return is 20%. However, it doesn't account for the time period. CAGR, which stands for Compound Annual Growth Rate, shows the annualized growth rate of your investment over time. It's a more accurate way to measure returns for long-term investments. XIRR, or Extended Internal Rate of Return, is used to calculate returns from SIPs. It considers multiple cash flows and is ideal for investments made at different times. Remember, the longer you stay invested, the more your money grows due to compounding. Reinvesting returns ensures your wealth grows exponentially over time. Always evaluate returns in the context of your financial goals. Next, we'll talk about the risks involved in mutual fund investments and how to manage them. If you don't want to miss it, kindly subscribe to our channel, Stock Glimpse India. See you soon.